Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on euro currency. So in general, on technical side, we do not have really a lot of changes in the recent two sessions. As you can see, Friday action mostly was in the same range as on the Thursday, but at the same time here we have two moments. They may be not quite obvious, but they are important because they point on the possible upward continuation. So on this week, most important information and most interesting things happens on the fundamental background. So you know that we've got in this week gross domestic product release, we've got Fed statement. So that was really important, and some other data shown as non-farm payrolls release on Friday we've got. So all this stuff is very important because it shed the light on our fundamental background. So the cornerstone of our fundamental view is a changing balance between European Union economy and United States economy. And as you can see in the recent 2-3 months that the pace that has been shown by the economy in the beginning of the year started to fade. And in the recent couple of months, you can see that some deteriorating of the indicators in the United States economy. So, and that shift balance in favor of the euro. And that is the major driving factor of our long-term view. And recent week shows that this driving factor still stands intact. So it still stands on the table, which means that the upward action on the euro currency should continue. This changing of this balance already find its way in the prices. So as we know that the monthly chart stands in more relation to the fundamental factors rather than technical, and when something is changing on the monthly chart, it means that the same change stands in the fundamental background. And as we talked about this last week and this week, we've got finally the bullish reversal month on the euro. And that makes something. It means that the fundamental changes find a reflection in the price. It's very important. So in the short-term perspective, guys, what we have, after the minor pullbacks, OP target has been completed, market has shown minor pullback. Now it turns up again, showing the upward action. So all the stuff we have traded for the week, or better to say within the 2 previous weeks. And now you can see here is a nice acceleration. Trend has turned bullish again. And take a look. Side by side, we've got 2 grabbers, bullish grabbers, which suggest the taking out of the stop. But what is more important, guys, is that market stubbornly stand right below the previous stop. So this is the bullish sign. Usually, when because currently at the first glance you could suggest why we can't get some kind of this A, B, C, top, D pattern. So that theoretically is possible. It's also will be bullish pattern. So in this case, we will get this A, B, C, D, got this triple to pine, something of that sort. And why in current situation this is impossible? So I would say that in general this is of course possible because we do not know what will happen in the future and what driving factors will appear. But with all other things stands equal, usually when market intends to form the ABCD pattern, the downward action at the C point starts very fast and soon. So the fact that market stands stubborn right below the previous top, and taking into consideration that here we actually not at the resistance, so here we do not have any barrier. It means that we should treat this action not as some kind of the reversal to the downside with the CD leg, but that is a consolidation before the breakout. Because this price behavior is not typical for a normal action with the ABCD pattern and a normal price action around the C top. This is something different. And I would suggest that in the current situation, it's very probable that we could get this butterfly pattern. Because take a look, the extensions to the upsides, 127, 1618, they coincide with the daily confluence. So take a look, the 127, 12 or 7, 161 and 1244 while on the daily you can see 1207 at the first level, 1236 at the second level. So actually almost the same distance. On the daily chart, the next target will be after this confluence. XOP is 1288. So my suggestion is that market first will hit this area, complete the butterfly, and then some moderate pullback is very probable. That will be the chance to take the long position again for a daily trader. So currently, as we talked about it on Friday and Thursday, this is not very comfortable point for taking the new long position, except only if you would like to possess yourself on the grabbers and trying to take the fast profit. If you do not intend to keep trade for a longer time. So if you're ready to close position around the confluence, that makes some sense. But if you would like to take the position with some fire-going action, with the greater swing to the XOP or maybe greater, in this case, it would be better to wait for the major retracement. And that probably will happen only when the market will hit confluence, and it will be as a reaction on the confluence. So that's our current view on the euro currency, but the fact that market stands very tight below this top, it means that market is forming a bullish flag, and that suggests that right on the Monday we could get the upward continuation. So that's what we see currently on the euro.